Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Big L, Lanny, you got Bert, the Dividend Diplomats. We have a ton of expected dividend increases to talk to you about in this video, so buckle up, pour your coffee, pour your beer, your wine, whatever the heck you want to drink while you're watching us, and get ready to talk some dividend increases.
Smash that subscribe button, give Bert and I a thumbs up. As he said, we got to dive into this article because we got 1, 2, 3, 4, 5, 6, 7, 8, 9 dividend increases that are about to happen this upcoming April, baby. The best month for dividend investors.
Yeah, but first, why do we love dividend increases? Our goal is to reach financial freedom by investing in dividend growth stocks and growing our passive income stream to cover our monthly expenses. That to us is financial freedom, along with so many other people. Dividend growth stocks, the key word growth in there. Yeah, Lanny's just getting all hyped up over there talking about financial freedom, because how could you not? So we love seeing our dividend income stream grow without lifting a finger because cost increases. So we want that dividend income stream that we are living off of to grow as well.
Oh yeah, when the dividend stock grows that dividend, it brings music to Bert and my ears. And April is a sweet, sweet month for financial freedom goers, dividend investors, and all investors that own some of these dividend growth stocks. Bert, we have 9 dividend growth stocks we're going to talk about. Some of them are on our top 5 foundation stocks. Others could be on our dividend stock watch list. Some of these companies, hey, Bert may even be buying one of these companies every single week. Again, this is the heart of the dividend investors calendar year right here. I mean, Bert, I know you can't wait to dive into this. I'm excited as well.
Yeah, as Bart Scott says, can't wait. But let's go right in. Dividend stock number 1 on this list is Procter Gamble. We're going to start out with one of our top 5 foundation stocks, ticker symbol PG. Open up your medicine cabinets, everybody. I can guarantee you're going to find one of those products in there somewhere around the house. This consumer staple giant is very near and dear to our hearts as we both have large positions. But what excited me most about Procter & Gamble is not only are they a dividend king, but I want to flash back 1 year ago to this month when we were in the heart of the pandemic, when companies were cutting, slashing, suspending their dividends. You had a few bright stars that said, you know what, we are going to raise our dividend. We're going to keep pushing through. We're going to show you why we are one of the greatest dividend growth stocks out there. And that company was Procter & Gamble. So that's why we love this company. We are so pumped up that they are going to be increasing their dividend once again this month.
That stock price has appreciated quite a bit for PG. I know we like to have a lot of fun to see, okay, what's the dividend growth metric going to be? They've, luckily have been able to finally start outpacing that 5-year average growth rate, which is just under 4%. Currently paying at just over 79 cents per. I don't know what you're expecting here. I could see a nice 2-cent increase, probably in that 2.5 to 3% this year, but prove me wrong, Bert.
I can't prove you wrong. Management's going to prove you wrong. I'm going to expect 4 to 6% here. I'm going to go a little more optimistic. So just above their 5-year average, but probably below last year's dividend increase of 6%. So I'm not expecting any stocks to get knocked off here, but it'll be a decent size increase. Hopefully.
Right. So I'm saying 2.5, 3.5. Bert's got the 4 to 6. Let's see it.
Yeah, let's see. Dividend stock number 2 is another top 5 foundation dividend stock here. And Lanny said it earlier. This is the company my wife and I are at least buying 1 share of every week. That company is Johnson & Johnson, ticker symbol JNJ. The healthcare and consumer giant is also found in your medicine cabinets everywhere. Some of the massive brands in their portfolio. What I love about Johnson & Johnson is their consistency. If you want to talk about companies that have very scheduled, very consistent dividend increases, J&J is that company. Last year's dividend increase was 6.3%. Lanny, you want to guess what their 5-year average dividend growth rate is?
6.3%.
Just under 6.14%. But I guess I teed you up wrong for that one. So, but in all seriousness, how nice is that consistency, especially last year when we went through a pandemic? They stuck right to the plan and continued increasing their cash flow to shareholders.
Yep. So, they raised it 6 cents last year. Keep this in mind. Before that, it was a 5 cent increase. The year before that, it was a 6 cent increase. The year before that was a 4 cent increase. So you're looking at always in that 4 to 6 cents right now range. Last one being 6 cents. Man, I'm going to go with another 6 cent increase for J&J is my guess. So 6% increase, 6 cents, 6. Let's go.
And you know what I'm gonna guess? 6%. So we're gonna have a 6, the number of the beast for all you Iron Maiden fans out there. And on that note, I think we are gonna go into our next company here.
Yeah, please.
Before I'm getting a little slap happy, everyone. So I very much apologize.
Bert loves this third dividend stock. Now, this third dividend stock just became a dividend aristocrat in 2020, and they barely nudged it in there. They were at, they were at inches going into the end zone for the aristocrat, and they just got inches. Now, Bert, what happened last year? Who was this company?
I was going to say the car ran out of gas and just barely made it downhill enough over the finish line here. This company is IBM, International Business Machines, ticker symbol IBM. That dividend increase last year was a blistering 0.6%, but it was an increase nonetheless. So yeah, they are in that dividend aristocrat family. I recently wrote an article on our website about is IBM an undervalued dividend stock to buy, because some of their metrics are looking great. Their PE ratio is less than the market. They have a dividend payout ratio less than 60%. They have that history of increasing their dividend, and they are a cash cow. They produce a lot of cash in their business. So that's what I wrote about. I don't know if I love this company, but I like it. It's got some strong metrics. Their 5-year average dividend growth rate is 4.66%. So honestly, as I think through what do I think IBM is going to do with that dividend increase, I don't have a cent number, but I don't think they're going to beat this 4.66%. I'm going to say this increase is going to be between 3 and 4%. What about you, Lanny?
They showed us 1 cent last year. They're showing us 1 cent again.
Oh, even lower. Man, Lanny is
0.6% increase again. When you actually look at the history of it, we'll find out, maybe towards that end of April, right, Bert?
Yes, we will. Dividend stock number 4, we're going to go here to the utility sector. This company is Southern Company, ticker symbol SO. It's not one of our other top 5 foundation stocks in your consolidated Edison that we like to cover in the utility sector, but Southern Company is a darling of the dividend investor community, because there was that period where it seemed like every dividend investor and every blogger scooped up this company. They have a very consistent dividend increase track record as well. Their 5-year average is 3.36%, and last year they increased that dividend 3.22%. So what do I think Southern Company is about to do here in the coming year, the coming month? I'm going to say between 3 and 4%, and probably on the lower end of that 3% range. What are you thinking here, lady?
I'm calling a 2 cent increase, kind of consistent with the last few years. Going from 64 to 66 cents is my call for the Southern Company. And I'm thinking it's going to be kind of in that, maybe middle into that 2nd to 3rd week of April. It's kind of, in that 14th to the 20th of April, they should be. I didn't look at their investor relations page, but I'm assuming it's going to happen here in about 3 weeks.
Yeah, I'll be shocked if the Indians have won a baseball game by the time they announce that number, because that team is not going to be looking that great this year.
We'll win with pitching.
Yeah, Shane Bieber will get one, but I think dividend stock number 5, Lanny, this is your company between the two of us. I can't be the one to do the bio on this one.
Well, we've all heard it on the radio. We've all maybe have seen some of their order books in your work office somehow, but this 5th company that we're talking about is Grainger.
Grainger.
Yeah, ticker symbol is GWW. Again, a huge company, really involved in a lot of your maybe infrastructure with how you work in a nuts and bolts place, as well as a nice catalog of products that they can help with. Good consulting background as well with Grainger. They were taking a lot of heat years ago when I was buying them with Amazon, because of just the price of their equipment was a lot cheaper than Grainger. But what Amazon can do is to teach you how to really set up your shop, set up your workspace, your work plant. And I mean, that's what Grainger actually, specializes in as well. And last year, I mean, Grainger really, I think, surprised a lot of people, Bert. Um, during a global pandemic when they went from $1.44 to $1.53. So when you do the math on that, they came in with a 6.25% increase last year. Typically they do April, but last year again was the curveball, probably because of the pandemic. They waited until July for the increase. So Bert and I are thinking that they're coming back. Grainger is coming back to April.
Yeah.
And they're coming in that end of April, Markish, towards that final week.
Yep. Yeah. And I mean, I think that's absolutely right. Last year was, in my mind, an anomaly for this company in terms of dividend increase announcement. They weren't a consumer staple that was still getting purchased by people when they were stockpiling on all their goods. They were a company that had businesses purchasing items from them, heavy transportation. Who knew what was actually going to happen and how things were going to move in April? So yeah, you can understand why management said we're just going to maintain our dividend for now. We can't guarantee anything. But the first chance they got, they announced that increase. So their 5-year average dividend growth rate is just under 6%. And with that nice increase they had last year, right around their 5-year average growth rate, personally, I actually don't really know what to expect. I'm feeling a little good today, though. So I'm going to say their increase is going to be between 8 to 10% for Grainger.
Is
Yeah,
that because they have a low yield now or at 1.5%? You're thinking it's going to be a higher growth rate, Bert?
that's exactly what I was thinking. And that's why. But no, I was just saying their stock prices climbed. Things are going well for the company. And let's be real, we've seen a lot of great dividend increases over the last few months, haven't we, Lanny?
We have. I mean, yeah, Grainger is trading at almost $400 per share right now.
Hmm.
That's wild. Again, the yield is at 1.53%.
And that's not because of Wall Street bets. That's just because the company has crushed it. Their earnings are doing well.
Now, one thing we'll have to talk about here is guess what they'll become this year?
Oh, are they going to become an aristocrat?
The dividend king, baby.
Oh man, a dividend king. There it is, the king of the ring. Jerry the King Waller himself is going to become Grainger.
Grainger, baby. Ticker symbol GWW. So Bird's saying 8 to 10%.
What are you thinking, Lanny?
I'm thinking 4.6%, 7-cent increase.
All right. Well, hey, it doesn't matter. That gets you to dividend king status, whether it's a 4.6% or in that 8 to 10% range that I'm thinking of.
Let's see it.
Company number 6, everybody. We are cruising through our 9. We are getting there. We promise you. This company is Apple, ticker symbol AAPL. This is a company that really doesn't need much of an introduction, does it? I'm pretty sure we're all pretty familiar with the Macs, with the iPhones, all that good stuff, and all those good products that the company has. Their dividend increase last year was a nice 6.2% increase, which is on the lower end of some of these technology companies. And it's been lower than their 5-year average dividend growth rate of 9.6%. That increase last year of 6.2% is lower than that 5-year average dividend growth rate of 9.6%. But the million-dollar question is, this is a hotly covered company because so many people own shares of Apple, and they tell you so much about what's going to be happening in the market, what's going on, and their dividend is always huge news for investors. Lanny, what are your thoughts about Apple in the coming month?
Obviously they do a lot of stock splits. They had the 4-for-1 stock split last year. We all probably remember everybody rushing to buy Apple because of the stock split when they don't really understand what the stock split's for. I think we talked about that in our video. I know the increase last year in 2020. Things are just very interesting right now. I think very fluid. Gosh, what would I think Apple, who yields barely 0.7%? I know their stock prices, obviously, hasn't like killed it, but they're at the $120 mark. So kind of hovered around the $100, $120 mark for some time now. They're at 20.5 cents a quarter. I mean, I'm going to say that they go to 22 cents. Maybe they increase it at 1.5 cents. Again, this is kind of hard to judge, but 7.3% increase that would equate to get to a nice round quarterly dividend of 22 cents per quarter. I think that's solid. 7.3% is nothing to scoff at. I think they like to reinvest a lot of that cash back in the business. Look at their balance sheet. You'll see what I'm talking about with their cash. They always have to be innovating with the competition with Samsung, and not even to mention in the computer space, in the streaming space with Apple Plus. I mean, they're in so many wars right now that they need to continue to stay innovative and spend.
And
So,
that is why I think the dividend increase is actually going to be lower than what Lanny is projecting. I'm thinking it's only going to be
whoa.
a 1 cent per share increase in the quarterly, which is a 4.8% increase. Still good, but not as great as Lanny. We'll see though. But for Lanny, I think he laid out a great case for why it's not going to be a double-digit dividend increase coming from Apple.
Yeah, gotta spend.
Well,
All right. I think you need to talk about dividend stock number 7. We have owned this company, you and I both.
we have been through the ups and downs, and some ups and probably some downs with this company. That company is Kinder Morgan, ticker symbol KMI. We bought that.
We are not alone in that game. I know there's a lot of people on this YouTube watching right now, a lot of Kinder Morgan investors that love Kinder Morgan for the dividend. So there's a lot of us out there.
Yes, it is. And we are out of the valley for Kinder Morgan because they cut that dividend in, what was it, 2015, or was it the end of 2014, Lanny?
Thinking back at the history, gosh, because we've owned it for so long, when they cut the dividend, it was back, I think 2015, I want to say, but
yeah, they kept their dividend growth low because they got into a little bit of debt problem. They had to cut the dividend, pay down some of the debt, right size their balance sheet. Management did a very successful job with that. They were very conservative with their dividend. And then finally in 2018, the dividend growth came back after the balance sheet was in better shape. So with that, we've been enjoying some of the dividend increases that come along with Kinder Morgan. Last year's dividend increase was very conservative from what the company's initial plan was to rebuild the dividend. They only increased that dividend by 5.48%. So obviously it wasn't as large as some of the years past in 2018 because the price per oil just collapsed also last year, in addition to some of the pressures from the pandemic. But with that, the oil's finally starting to rebound once again, the price per barrel. It's coming back. We'll see if it's going to be an aggressive dividend increase. I don't think so. I think management's still going to be pretty conservative because of the price instability in the oil market. So I'm thinking I'm just going to give it a flat 5% dividend increase as my projection for KMI. What are you thinking?
That's pretty good. I know they did 5% last year during the pandemic. Now that it's normalized a little bit, I know investors would throw eggs at them if they didn't do anything with the dividend. Yes, I said egg. They're at 26 and a quarter now. If they were to go to 27 and a half, that would equate out to, doing some quick calc math, about 4.76%. So I'm with Bert. My guess is 26 and a quarter to 27 and a half. So 1.25 cent increase, 4.8% increase.
Perfect. We are cruising along here on the list now. Company number 8 is a company we recently featured on our YouTube channel. Thank you for all you viewers out there. This company is Travelers Insurance, ticker symbol TRV. They are a company that is an undervalued dividend growth stock in the hotly covered insurance sector that has been on a tear over the last year, as companies have seen their investment portfolios grow and grow and grow, and their expenses decrease as there have been less claims because less people have been on the road and less other issues going on. Travelers Insurance has definitely benefited from this. The company has increased that dividend for 15 consecutive years. Their 5-year average dividend growth rate is 6.88%, and last year's dividend increase was 3.65% here. So here's the $1 million question: is what do you think Travelers dividend is going to do, Lanny?
All right, so they obviously have had quite a bit of appreciation. Insurance companies are killing it. Travels being one of the biggest. You can check out all the metrics at the video that we took them through the ringer and the dividend stock showdown. So Travelers, again, ticker symbol TRV, is going for 15 plus years of consecutive dividend increases. Payout ratio is extremely safe, but given that they could have done something a little more last year, they kind of only raised it a few cents, obviously from 82 to 85. I'm thinking they're going to do a 5-cent increase, not knocking the balls off, but 85 cents to 90 cents at 6%.
I was going to say the same thing. I think they're going to bring it up from 85 cents to 90 cents. So there we go. Easy enough. You can take that one to the bank, maybe. So here we are, number 9.
Made
Let's
it.
round it out. Everybody get those Costco cards out of your wallet because this one is Costco, ticker symbol COST. What's cool about Costco is they are a company that has very randomly announcing special dividends, which was something they announced in November, off schedule from their standard dividend increases. So please make note of that. They typically increase their dividend annually in April, but they will announce special dividends after evaluating their balance sheet and their earnings results and their cash flow towards the end of the year. So their 5-year,
huge $10 special dividend last year per share.
yeah, that was massive. So congrats to all you shareholders, which makes it a little bit easier of a pill to swallow for that low dividend yield that you get otherwise. When you build in the low yield plus that special dividend, it's a nice little combo. Their non-special dividend increase last year was 7.69%, which was below their average dividend growth rate of 12.9%. So the interesting question is going to be is what do we think Costco is going to do with their dividend? So let me take a quick look here as I start crunching some of the numbers.
And again, they'll probably announce in the middle of April, team. So everybody who's watching, stay tuned. Between April 15th and April 25th, somewhere in that range, they'll announce.
Yep. So their current quarterly dividend is 70 cents per share. I am going to say it's going to be a 7-cent per share increase. So it's going to be a nice 10% increase right there. That's my projection. In addition to that $10 special dividend right there that they had announced in November. So what are you thinking, Laney?
Well, I'm not as aggressive as you. For some reason, I think maybe the pandemic bug's still on me. But I think they're going to go from 70 to 75 cents, 5-cent increase.
That's not bad. It's a lot of capicola you can put in there.
Yeah, I mean 7%. That's a good increase.
Yeah, we'll take it. So here we go, everybody. We made it through the 9. Let's give a quick summary here, and we'll put a chart up with the expected percentages that we predicted so they don't get lost in the shuffle here. Company 1, Procter Gamble. Company 2, Johnson & Johnson. Company 3, IBM. Company 4, Southern Company. Company 5, Grainger. Company 6, Apple. Company 7, Richard Kinder himself, Kinder Morgan. Company 8, Travelers. Last but not least, Costco. Man, we went the full complete game right there, Lanny. 9 dividend stocks, 9 innings. We are baseball seasons among us.
We did it. We did it 9 innings, 9 dividend stocks. Consider them for your watch list or stocks to buy going into April. We can't wait. Again, this is the best month for dividend investors. Let us know how many dividend stocks out of the 9 that you own that you can't wait for. And let us know which ones that we did not talk about. Bert, what else you got for me?
Absolutely nothing. So everyone, please again, subscribe and thank you again for all your support as we race to 10,000 subscribers.
Thanks, everybody. Again, let us know if you have any questions at all where we get our information or any questions you have about how we analyze these dividend stocks and growth rates. This is Bert and Laney from the Dividend Diplomats.
Over and out.